All right, welcome real estate fans to another episode of Seattle's Real Estate Podcast. I'm Dan Edwards, your host, and I'm here to provide you with the inside scoop of living, working, and playing across the greater Seattle area and the east side. It is Wednesday, August 14th. I can't believe it's August 14th, and we're coming at you live on Facebook and YouTube. Feel free to chime in with comments or questions. And if you're listening to a recorded version, please make sure you subscribe and rate our podcast. You can find our podcast on Spotify, Google Podcast, which I think is going away, so never mind. Google Podcast, YouTube, and Apple Podcasts, which I get them popping in there so I can listen to my own voice, which I don't like to do. But you may enjoy hearing this at a later time, future podcasts, where we're talking about everything about real estate and about living in the greater Seattle area. We have got a great show for you today. First off, during our real estate segment, our Real Talk segment, we're going to discuss 3 things you need to know before you start investing in real estate. Then we're going to welcome in and keep that theme of real estate investing our good friend Tucker Maxwell with Guild Mortgage to discuss different financing options in order to get ready for buying a rental property. And then finally, Dylan Foggett with Brink Property Management will be joining us with all things about the rental market. It's going to be a great discussion. I think that there's going to be a lot of great content. So grab a pen and paper, or maybe you're like me and you use a Remarkable notebook, which is down there. But grab it, take some notes, and enjoy. Let's get to our Real Talk segment. Our Real Talk segment today, we're talking about 3 things you need to know before you get started in investing. And here's the one thing that I know about real estate and I love about real estate. It is the most stable path to wealth in the world. I know that's a bold statement, but it's true. If you look around the world, those that own real estate, right, set the rules. That's really kind of the deal. So owning real estate should be an ambition of yours. And even if it's just as a first-time home buyer, but really at some point you've got to figure out a way to get into the rental market. And it did take me a while, so I'm not like this guru. I'm not going to teach you 7 steps on how to do seller financing, although I highly recommend you study it. I am going to start with 3 things that you need to know before you invest. The first thing that you need to know is your numbers. Now, I don't want this Real Talk segment to go super deep on the numbers that you need, but here's the truth is that you need to be able to calculate the investment. Here's the one brief thing that you need to know. Profit. I'll just say profit. A lot of people will think, man, I'd like to own a rental. And then that rental is throwing negative cash flow. That's actually a loss, not a profit. Right. So you need to be able to analyze the costs of the mortgage, the costs of repairs, the costs of the money. All of those things are going to go into determining the number for you. Now, across the country, there's lots of different opportunities for investing in real estate, one of which is rental properties, and different cities have different rules and different regulations. Some people invest in rental properties for rental income. Some people invest in rental properties for appreciation. So knowing which markets and numbers are going to be important to you is going to determine your strategy. A lot of people say, hey, I want to get 6, 8, 12% annual appreciation. So you need to know where those markets may be that have that kind of appreciation. Or perhaps you say, it doesn't matter where my rental property is. I just want to have $250 a month of positive cash flow. There's a game that I like to play. It's called Cash Flow Quadrants. And it's a fun game. And the simple aspect or goal of that game is, how do you create passive income that supersedes or exceeds, that's a better way, that exceeds your expenses, so that if you're bringing in rental income in excess of $5,000 a month, and all your expenses are $4,000, that's profit. That's a number. So you may go out and find 4, 5, 6, 7 rental properties that are throwing you anywhere from $200 to $300 to $500 a month in cash flow, and that's your exit strategy. Because when your income exceeds your expenses on a passive basis, You don't have to work anymore. Your money's working for you at night. So know your numbers. All right. The next point is, and I took a long time on that point. Sorry. The next point is know your neighborhoods. So this goes back to, is this neighborhood an appreciation neighborhood, or is this neighborhood a cash flow neighborhood? Is this neighborhood safe? Is it close to schools? Do they have parks? Get out, walk around a neighborhood. Even if you plan on investing in another state or city, I highly recommend you fly out there and kick around the neighborhood, or have a real estate agent with boots on the ground, hop onto FaceTime and show you around. So you really need to know the neighborhoods that you're investing in. And then finally, know the players. Now, what are the players? Who are the players, right? Well, first off, you need a really good team. You need a management team, because if you are going to do this professionally, if you're going to invest in real estate as an investor, not as a hobbyist, the best way to do that is not self-managed. The best way to do it is to alleviate some liability. And we're going to talk to our good friend Dylan here later, and hire a property management. The other thing you're going to need to do is find money, and money comes from banks 100% and lenders, but there are also private money lenders out there that can help you cover a gap in the event that a home won't actually be able to be financed through conventional methods. You'll need to find an inspector, somebody who can look at a home and say, hey, if we did these repairs, we can actually increase the value this much. I'm also going to put a plug out there for a real estate agent that can help you kind of guide you through this process of purchase, and also connect you with some of these players, some of these individuals, whether it be a roofing specialist or a foundation specialist. One of the best things to do when you're investing in a property is identify a property that you can do three things to that will improve its value to allow you to increase the rents that are already maybe in there, or maybe divide up that property so that you can actually diversify your rents in that property. Maybe turn half of it into an Airbnb and the other half into a monthly rent. So having a team that can help you see the things you might be missing on your own is invaluable to building a strong rental portfolio. So know your numbers, know the neighborhood, and know the players. Those are three things you need to know before you invest in real estate. Now we're going to take a short commercial break, and we're going to talk about one of those players, Tucker Maxwell, who could help us determine a fantastic strategy for money when investing in real estate. We'll be right back.
Are you tired of not knowing where your money is going? Do you feel like you start getting ahead on your finances, then get hit by an unexpected expense and feel behind? Doug Peterson with Get Priorities Straight helps guide you to getting your money to do what you want it to do instead of wondering where it went. Doug has helped ambitious, busy, successful people be delighted by handling their money wisely. To have a conversation with Doug, call 206-264-4424 or email meeting@letsgps.com or info@getprioritiesstraight.com.
All right, welcome back to the show, and welcome to the show. I'm your host, Dan Edwards, and I'm now joined by our good friend, Tucker Maxwell with Guild Mortgage. Welcome back, Tucker.
Hey, thanks, Dan. How are you?
I'm doing great, although I just got triggered. The ice cream man's going by. Yes. Dang it.
Yeah, it's that time of year.
In the middle of a podcast. I can't just hop out and go get an ice cream. That would be so fun. All right. Anyways, back to my ADHD. Tucker, we are talking about real estate investment, and we're going to talk about what products are available for purchasing a rental unit. So what do you got?
Yeah, so diving in, traditionally most rental properties are bought through conventional means, through Fannie Mae and Freddie Mac. So your typical home loans, which require typically a 20% down payment on a 1-unit home, 25% on a 2 to 4 unit property. So those are your most commonly used loans. The only caveat is that individual looking to qualify through a conventional loan needs to have verifiable income and employment. So your typical like W-2 employment. And so that's one mean. The second option.
Before we leave that one, let me ask you a few questions about that first option.
Yeah.
So I buy a house that's going to be not my primary residence, but a secondary residence. And that's 20% down. Yes.
Well, so second home is different than investment
Rental home.
property on our.
Oh, okay. Okay.
Yeah. So
Like,
a second home, if it's truly going to be a vacation property, like you and your wife are going to, travel to the coast and it's going to be a second home, you don't plan on renting it out, you can buy those with as little as 10% down.
okay.
Once
Okay.
you want to rent it out, that is an investment property, and that's when the down payment is going to increase to 20%.
Okay. So the purchase strategy for a rental is 20% down. And then if it's a duplex, it's 25% down.
Correct. Yep.
Now, can you, in a conventional loan, can you use any of the rent to qualify?
Absolutely. You can. And so when we order the appraisal, we'll ask the appraiser to do a rent analysis for us and tell us what the likely rents are. And we use that rent to offset the payment. So it doesn't really impact somebody's debt to income ratio too much if the property is going to cash flow, because we're going to assume they're going to get those rents and it's going to offset the payment.
Not 100%, but 70% of that annual. Yes.
Correct. Yeah, because we're going to apply a 25% vacancy. We're going to assume there's going to be times between tenants. You're going to be doing repairs that you're going to have to be responsible for it. So that's why we include that 25% vacancy.
So can somebody use a VA loan for that?
No, VA loan needs to be your primary residence. However, you could buy with a VA loan, live in it for a year, and then move out and then convert it to a rental. But it needs to be initially bought as a primary residence.
Okay, cool. USDA loans.
Primary residence only.
Only primary residence. Okay, cool.
Yep.
So mostly conventional. FHA?
No, again, FHA, it needs to be a primary residence to start. Again, you could convert it after the fact, but yep, primary only.
Okay. So as a general rule of thumb, you move into a place, and this is a house hack, right? And then you can buy a new place as your primary residence and then rent that one out. But conventional are the only ones you can do a purchase on, and the rates on conventional are a bit higher than FHA and VA right now. Yes.
Correct. Yeah, within about 0.5%.
Okay, so 0.5 percentage point, you have a savings on that primary resident. Okay, that's good. All right, good to know. Good numbers. What other options are available?
Yeah, so the big one that we're utilizing today is for investors that don't necessarily have provable income, or maybe not adequate income in order to qualify. And so they're debt service coverage ratio loans, or DSCR loans is what we're using the acronym today. But basically, folks qualify off of the property's ability to cash flow. So we look at what are the average rents per month on a property of like that, and what is the mortgage payment. And as long as the rents that are estimated and likely to be received outweigh the mortgage payment, we qualify just simply off that relationship between how much rent can we generate and what is the payment.
So if somebody can identify a property that already has tenants in it with cash flow already, send you those contracts, and then send you the purchase price, you could basically tell them how much down payment they need in order for that DSR loan to work. Yes.
Exactly. The qualification is very quick, because we're not looking at income and assets and their credit report for, their liabilities. It's just simply, does this pencil? And if it does, you qualify.
Okay, cool. Well, I'm going to send you a property that I'm actually looking at. Yeah, it's a duplex in Northwest Everett. So
okay, yeah, be happy to.
Cool. All right. Any other insights for investors that want to invest? What other financial tools are in your tool belt?
The one thing that you mentioned that I always like to remind people of, especially for your first time home buyers, is the ability to buy a multifamily property to start with as an owner occupied property and rent out the other units. So it's typically more difficult when you have kids at home and the kids are older. You're not really wanting duplex or want that shared wall. But if you're just getting started, you don't need a bunch of space. A great way to start your real estate portfolio is to buy a duplex or a triplex or a fourplex. Live in one unit so you get to take advantage of the owner occupied loan. We give you credits for the rents you're generating in those other units so you can qualify at a much higher purchase price.
Okay, that's awesome. So do that hack. And I think we talked about that a couple of weeks ago. We found a duplex that had some features there. And I have to say, as we're looking at our current unemployment and the inflation and all the indicators that are kind of blinking recession or blinking slowdown, is there are still people that want to get into housing, and one way to do it is to create some kind of where half of your mortgage is being paid by tenants. So it's not, I mean, it's definitely time to get creative, because there are people that do need to sell these homes. So just be aware of that. All right. Anything else you want to add, and how can people get a hold of you?
No, just give me a call, 425-757-9202. Would love to talk through anybody's real estate strategies and how we can finance them.
You know, did I forget our little bumper? I totally forgot our bumper for the mortgage moment. I was just looking at it. I was like, oh no, I'm not going to play it now. You just missed out, but darn. Okay. We're going to take a short
next week for the bumper.
Tune in next week for that bumper. That's just so exciting. That gets us all hyped about it. All right. Thank you, Tucker, for conversation. We're going to bring our good friend, Dylan Foggett with Brink Property Management after this short commercial break and a business spotlight bumper.
There we go. Nice.
You take your car to the shop to check under the hood to make sure everything is working properly. You take your body to your doctor every 6 months for a checkup to ensure you're healthy. You get your teeth cleaned at the dentist often. Okay, well, maybe not often. But what are you doing to make sure your house is staying in tip-top shape? At Key Inspection Services, we value quality, expertise, and education above all else. We inspect all types of homes of any size and age, whether you are buying or selling, or just wanting to learn more about your current home. Our services are designed to be a one-stop shop for all homeowner needs. We offer sewer scopes, air quality testing, mold testing, infrared scans, and more. Whether we are reaching new heights on a roof, traversing the trenches of a crawl space, or having a crappy day scoping your sewer, no pun intended, we strive to give you the best service possible. As the #1 home education and inspection company in the Puget Sound region, our goal is to ensure that you are more knowledgeable about your biggest asset at the end of the day. You can easily book online at www.keyinspectionservices.com or give us a call at 800-748-8766.
Oh, see, I meant to hit the bumper, but somebody called me. So hold on here. All right, please welcome to the show my good friend Dylan Foggett with Brink Property Management that have been serving the Seattle area for over 30 years, providing residential management services to owners, investors of single-family, condos, townhomes, and small multifamily properties. Brink remains family-owned and operated since 1996 and is proud to attract and retain the most experienced property managers in the region. Welcome to the show, Dylan. How are you?
Thanks, Dan. Yeah, it's great to be here.
Did you run out of battery? Because you had a great background, and then
I know. You know, I even had my mom's painting in the back and everything.
Yeah.
I was having some major connection issues in our conference room, so I came to a hardwired connection here, and I can hear you loud and clear. So.
Okay, very good. I know that it was like I was noticing in the background. I was like, oh no, something's happening. All right, so let's talk about the rental market update. That's what we're talking about today, and I'd like to have you on a little more often so that our listeners can get some insights into the Seattle market and changes and stuff like that. But we're going to kind of go sky high and dig deep. And so let's talk about what are the current market conditions for owners and renters looking for housing options.
Yeah, I think, coming on once a quarter is probably perfect. It's been a couple of years since we've been on here, and a lot has changed, actually. You know, we are in what I consider post-COVID as far as the real estate market goes. Things seem to ebb and flow pretty heavily, but this year has remained, fair and stable for both parties. You know, homes that are priced correctly are leasing quickly. We are seeing, tenants obviously have access to a lot of data. They're looking at a lot of homes. They're on Zillow, things like that. So you really need to be fairly priced in order to get your home leased. But again, once you're at that point, it's going to go and usually within 2 to 3 weeks or so.
2 to 3 weeks. So that's kind of the rental timeline. So what trends do you predict for the rest of this year heading towards December?
Yeah, it's very difficult to predict. What I can draw from is really the last year or two. Historically, we've had years and years and years of data to draw from as we go through seasons and things. But since COVID hit, it's been, as I said, a lot of ebb and flow. Last year, things got quite slow towards the end of summer and tapered off pretty significantly into winter, particularly November and December. This year, things have been kind of on the upward trajectory at the beginning of the year and then fair and stable since then. So we're hopeful for a more mild seasonal slowdown, but we do expect some slowdown as we enter, kind of October, November, December, into the holiday season this year.
So Dylan, when you say ebb and flow since COVID is really a pinpoint in time that shook things up in the rental market. Like we were kind of heading in a normal trajectory of kind of scarcity in rental markets, but that shook it up to where we went from scarcity to abundance back to scarcity and abundance a couple of times since 2020.
Yeah, it's really been pretty peculiar, and I'll talk about kind of our pre-COVID and then today. But you always hear about the seasonality in the housing market, and winter months are slow, and then summer months is your hot cycle. We really saw an end to that. From really 2017 through 2019, we were leasing just as many homes in December as we were in July. It didn't really have that much of an impact. Obviously you have a couple weeks here and there with Thanksgiving and Christmas and things like that. But since COVID, that seasonality has absolutely returned, particularly the last 4 years or so. And we're hoping that's going to be a little more mild this year. We don't have specific data around it in our industry, but just my anecdotal, evidence or observations is that prior, companies like Amazon and all these other major players were hiring all year round. And a lot of times they are hiring from out of state and things like that. So people were moving here, didn't matter what time of year. December, there was just as many people moving here as the summer. These companies weren't growing on a seasonal cycle, such as our local real estate market. Since then, we see a lot more remote hires and things like that. So I do anticipate that seasonality to kind of remain as we don't have such a huge influx of migration to the area.
Gotcha. Okay, that's very. I'm glad we kind of unpacked it because I'm looking at it through my lens. It echoes it, but not quite the same way. So it's good to kind of that perspective. All right, so. Based on what you're seeing now, when is the best time of year to list a home for rent?
Yeah, right now I say anytime between really March and September is probably going to be your safest bet in order to get a decently quick rental at a fair rental price. And I always tell our clients that ask this question, any home will lease today if you price it to lease today. If you listed something on Thanksgiving morning at $2,500 and it's a $4,000 rental, you will have multiple applications by that evening. It's just not necessarily the best strategy, and so I normally say just kind of hunker down and wait out some of those slow periods.
Yeah, and it really depends on the cash flow that you require. I mean, if somebody can get away with renting a $4,000 a month for a few months at a low discount, fine. But yeah, obviously you're right. Just like in real estate, I can list a $600,000 house for $500,000 and get multiple offers fairly quickly. So, so as we were talking earlier, we were kind of talking as a strategy for rentals, how to know that if I acquire a property, what a fair market rent would be. We can always go to Zillow. I know the answer for a resale, but how accurate are these? And then what do you have as an alternative for that?
Yeah, I think Zillow is a fairly decent baseline for your very initial, exploration and whether or not you want to list your home. I don't think they're wildly accurate in cities like Seattle, particularly, neighborhoods like Beacon Hill. Just the housing types are so diverse, the quality of home, the age of the home, whether or not they've been remodeled, things like that. On the east side, I would say it's a little more accurate. If you're familiar with Issaquah Highlands, Klahani, things like that, they're fairly large communities. Homes were all built around the same time. And I think, those estimates are certainly more accurate there. But you're always going to want to do an actual market analysis, prior to coming on market and listing. And that's through a real estate agent, property manager, or the like.
So I can give you a property address and you can give me a CMA a rental CMA.
Yes, I could. And, I normally say it's preliminary until you physically see the home.
Right.
You can't get a real feel for the character and things like road noise and things like that. But we should be able to come up with a pretty good ballpark range just from photos online.
Yeah, I always say the A in Zillow stands for accuracy.
Right. Exactly.
If you don't get that joke, there's no A in Zillow. I didn't get that first because I'm not a great speller. So, all right. So, if somebody is looking to get their home ready, what are some of the most important things they can do? Like September is right around the corner. You're going to get it ready to go live in September, so you can get it in the market in the time. What should they do to prep?
I would say everything comes down to the condition of your home. It's a pretty simple equation. You got location, price, and condition. You can't change your location. Price we can work on later. You're going to want to make your home in as great of condition as possible. Free of all scuffs, hotel clean. That's what I always tell our clients. When a new tenant walks into this home, it should be like they walked into a 5-star hotel. You don't want to see hair in the drawers, dust on the baseboards, mildew in the caulking, things like that. You really want to prepare these homes to be nice and ready for someone to move in. And that's really the primary thing you can do. From there, it's just a matter of adjusting to the right price.
I gotcha. Do you ever have a company go in and detail a place prior to getting it on the market?
Yeah, on average, we'll end up sending anywhere between 8 and 12 work orders to get a home ready for market. Locksmiths, painters, handymen, cleaners, carpet cleaners, you name it. We go through top to bottom, and it really sets up your property to attract the best quality tenants possible, and B, it sets the foundation for the rest of that relationship. So
and I have to say, I walked into a house the other day, and myself and my buyer both just didn't feel it. Like it was doesn't feel right, and it was vacant, and it was stale, and it had a funky smell to it, and then the layout was even worse. So just like selling a home, renting a home is all connected to those same things. How does it feel? How does it smell? Smell is super important to me. I don't know if it's anybody else.
I agree. No, it's a big factor.
Yeah. So yeah, that's awesome. And you guys provide that as a part of your services. It is helping coordinate those services for the homeowner or the
exactly. Yep.
Okay. All right. So what challenges are we facing in the local market?
Yeah, the biggest challenges kind of our industry's facing at wide is just the rapid change of legislative policies that are being enacted. I read a report, and I'm going off memory, but from 1980 to 2017 in our jurisdiction, there was 4 legislative changes as it relates to landlord-tenant law. Since 2017 to today, there has been 93. Wow. And that's often coming down to local, cities enacting their own rental policies that are very much like the ones around, just slightly different. And
as you all know, the more involved our government gets, the better things get for us all.
Well, it certainly is a challenge, and to make sure that you're in compliance. It's rare that issues come up with your rental if you have proper screening standards and things like that. But when it does come up, you really want to have made sure that you have followed everything the way it is written. And that's a challenge that our industry faces, just making sure that you followed, your property may have a Seattle address, but you're in unincorporated King County. That's an entirely different set of laws and regulations that you need to comply with.
Yeah, and if there's one thing I know, this is an endorsement, is Dylan is on top of this stuff all the time. He always, it's his job, but it's one thing that you have to. We've got a question here about DIY landlords, and it's just you don't, if you don't know, that doesn't mean you don't get to comply, right?
Exactly.
It means you get into bigger trouble. So, all right, let's move to our next question. What are some of the owners moving out, should they rent or sell their homes?
Yeah, this is probably our typical clients. Most of the homes we manage, somebody has lived in prior. They've raised their kids in it. They're moving, trying to come up with an answer to this question. I always say it comes down to 2 things. Are you in it for the long haul or the short term? I think in the short term, there are very real risks to being a housing provider, either with a tenant with non-compliance, there's large maintenance issues, you have a whole structure to maintain. And if you're looking, at selling this year versus next year, I'm not sure it's entirely worth all the time taking on that stress and headache and that undertaking. But if you're looking at holding the property, over the long term, you will always be better off selling a property later than you are today. And so that's what I always advise our clients or prospective clients, just short versus long term. And you may be better off next year than you are this year, but it will come with some stress and work to get there. And it's a matter of whether or not it's worth it, year over year versus now or in 5 years,
Yeah, I think for me, I think the idea, because I get this question asked at the same time, is what am I doing with that money when I move it out of that investment or that home? Because essentially the beauty of buying a home is your money doesn't go away. You pay interest, there's that, but your money is going into the principal. So now if you're moving into the next home, are you going to cash flow positive? And if not, will the appreciation make up for it? And if those two questions are a negative, it's probably not worth the hassle. But if you have some positive sunlight on one or both of those, then go for it. So I think that it's just kind of coming back to your tolerance level. And if you're going to do it yourself, it's going to be much more of a headache. So find somebody like Dylan that can help make it easier. All right. So what are those common mistakes that those DIYers make?
Yeah, I think what we see from DIY landlords or housing providers, I prefer the term, is just getting excited that somebody's applied for the home or is interested in the home. There's usually no shortage of that. It's finding the right fit for your home that's qualified and ready not only to move in, but to maintain the home from there. That's where your biggest expense is going to be as a housing provider, is just the maintenance of the asset itself. And so we see a lot of DIY landlords get excited. They seem really nice and this and that, but things will always come up. And the question is of character. If something was to go wrong, how is that tenant or owner going to react to that circumstance? And so my advice would just be to pump your brakes a little bit, follow proper screening standards, make a logical and rational decision on who you hand the keys over to.
Yeah. Hard in, easy out. That's a lesson that I learned when I was helping one of my friends manage their place. Is the harder it is for people to get in, the easier it is for them to exit. But if you make it really easy for them to get in, the harder it is for you to get them out of there. So
Exactly.
Cool. All right. Finally, prediction for 2025. What do you see on the horizon?
Again, post-COVID, so we don't have a lot of historical data to draw from, but I expect 2025 to be very similar to 2024. I do expect, as I said, 2024 to taper off a little bit with the seasonality into the winter, pick up again right as we get into the new year, and then remain fair and stable as a general market. I think our local economy is strong. The demand for housing is certainly there. It's just a matter of being fair with your asking price relative to the market, and things should remain stable.
So if and like I said, there's a lot of indicators that are kind of blinking that there may be a real actual recession on the horizon. So do you see more people selling and then renting when that happens, or do you see people hanging on to their homes and rental?
I think with the way people are locked into really low interest rates by and large here, obviously some, if you bought in the last few years, that the interest rate's a bit higher, but some people are locked in at 2.5%, 3.5%. It would be really difficult to sell a home because, as you mentioned, what's the alternative? And you wouldn't necessarily be able to purchase that same home again at the same cost of living. And so I wouldn't expect that to result in sales and going into renting, but certainly the rental market will always be there. more so would be someone moving for work. And the question is, do I sell or rent my home? I would expect more people to lease their homes in those instances because, if the real estate market isn't as strong as it could be, if the economic tides were a little swayed, then a lot of times people wait it out through leasing their home.
Yeah, and I think also too thinking that if there's an increase in supply, right, then there's going to be a decrease in price. The problem is we just have so many unfilled households right now that it's not something that can happen quickly. But at the same time, some of this stuff happens slow, quick, right? So we could be reflecting, 6 months from now, going, "Oh my gosh, Dan and Dylan were like Nostradamus here."
Yeah, or way off. Yeah,
or way off. Yeah, one of those two. Yeah. All right, cool. Well, I have your number rolling there. So somebody wants to talk about retaining you guys to help them get their property. Just give me a quick, what do they do? Call this number, and then what happens?
Yeah, that comes directly to me. I'm happy to have a chat, and this is where partnerships with Dan and myself really work well. Is that Dan's very, very knowledgeable in the sales side of things and can give you excellent advice on that, and I can give you the practical and honest advice on what I think the rental route might take you, and that should give you all the information you need to make the right decision for you and your household.
Awesome. Well, Dylan, thank you so much for coming on the show. I so appreciate it. I'm going to bring our good friend Tucker back to the stage, I guess is what this is called. Tucker, did you have anything to add after hearing Dylan?
No, I think the one piece that I would add in terms of evaluating if you're going to turn it into a rental or not is, do you need the funds? I think that's where a lot of people, their hands are a little tied. They have to trade in that equity to do what their next plan is, and so they don't always have the choice.
Awesome. Yeah, that's good. Yeah. Do they need the funds for something, like their next house? All right. Now that we've got just a few more days left to summer. Honestly, it's like 2 weeks tops. What are you guys doing this weekend?
I'm climbing in the Cascades this weekend.
Oh, did you ever do that summit that we were talking about?
We did. We didn't actually summit it. We got fairly close. And then one of my climbing partners wasn't feeling like he would safely return. So we turned around. But we're going to try something else this weekend.
Oh, where are you headed?
We're at Calatin. So I-90 up in the Cascades in the Lake Wilderness area.
Nice. Ooh, that reminds me. I was supposed to say yes to somebody about trip in the Enchantments, and I don't remember. I got to go check on that. How about you, Dylan? Yeah.
Certainly less healthy, but I'm very focused on golf this year. So
hey, that's a healthy sport. We're all golfers here.
Yeah.
All golfers. Yeah. It's no one tries harder and does worse at this sport than me, but I am certainly in it for the long haul.
I beg to differ. All right. Well,
you're a light company here, Dylan.
All right. Well, cool. You guys enjoy your weekends. Thanks for coming on the show. I appreciate it. And we'll see y'all later.
That's great. Thanks so much.
You bet.